Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. Mnuchin says the U.S. businesses will have access to liquidity. Going into the article, Mnuchin said he and Fed Chairman Jerome Powell are in constant contact and have many programs they can use to ensure firms have access to liquidity. Although he said some of the government's authority to act was curtailed in the wake of the 2008 financial crises, we'll be rolling out other programs, he said, and there will be massive amount of liquidity. Pretty sure we know one of the plans to roll out on-demand liquidity. Next, I wanted to get into a few different articles because we are in fintech and there is a lot of exciting news going on in the fintech industry. The UK budget put fintech front and center. The UK government is to undertake a review of the country's booming fintech scene, promising increased funding and support for the sector in today's budget statement. The review will be led by Ron Khalifa, the chairman of payments firm Network International and a non-executive director at the Bank of England and Transport for London. We already know that the BOE is a paid Ripple customer. The announcement comes amid a gloomy backdrop with Brexit tensions raising fears of a fintech brain drain and the CV hitting growth prospects. Charlotte Croswell, chief executive of the industry body Innovate Finance, says, "We are at a crucial moment in fintech's development. UK companies are now entering a phase of maturity that requires action to ensure that entrepreneurs can not only establish and scale their businesses in their home market, but also export their products and services internationally." The UK's burgeoning fintech scene attracted $48.5 billion USD of investment in 2019, according to KPMG, and almost double the $25.4 billion USD injected into the sector a year earlier. Franz Doer, the founder and CEO of Flatfare, said, "I welcome the Chancellor's announcement to support the UK's world-leading fintech sector, making sure the UK is primed to incubate and host fintech companies will only help the sector keep attracting the much-needed capital from venture funds and private equity that is so vital for its growth." Next article is the Spotlight Fintech funding flying high in Brazil. The investments in Brazilian fintechs totaled US $1.6 billion in 2019, which is almost 3 times more than the figure reported in 2018, according to a study by Accenture. And as we know, Accenture is already connected to Ripple. This puts Brazil 5th on a ranking of the largest fintech fundraising centers in the world. The study by the consultancy and technology firm was based on an analysis by global data and financial analytics company CB Insights. It included information on the global financial activities of venture capital and private equity firms, corporations and corporate venture capital divisions, hedge funds, accelerators, and government-backed funds. The data enterprise comprised the period from 2010 to the end of 2019 and include equity and third-party financing, Accenture said. According to the consultancy, the number of transactions between fintechs increased by 6.8% worldwide in 2019, reaching a record high of 3,472. The report singles out 2 standout deals that helped drive volume up in Brazil: the US $400 million USD investment in Nubank by TCV, Tencent, DST Global, Sequoia Capital, Dragoneer, Ribbit Capital, and Thrive Capital, and the US $344 million investment in Banco Intermedium. And again, we've already discussed most of these, already connected to Ripple. A previous report by KPMG have already shown that fintechs were responsible for most of the VC deals closed in South America. In the fourth quarter of 2019, and for US $526 million of VC investments in Brazil alone. And Cellcoin, the database of Startup Association, AB Startups, shows that Brazil has over 500 fintechs, the majority of which are in the traction or operation stage. An example of growing Brazilian fintech in the traction phase is Cellcoin. Created in 2016, the company reportedly processed 3 billion reals, US 627 million USD equivalent, and 35 million financial transactions in 2019, a volume said to be 3 times higher than that of 2018. And the fintech cements status as disruptive force. Here's how investors can benefit. Investors continue hearing more about technological disruption, and one of the more tangible, credible examples of that is fintech, which is accessible via the ARK Fintech Innovation ETF. And ARKF invest in equity securities of companies that ARK believes are shifting financial services and economic transactions to technology infrastructure platforms, ultimately revolutionizing financial services by creating simplicity and accessibility while driving down cost. The challenge of discussing fintech across financial services is there are so many areas that new entrants, challengers, or vendors are trying to access or trying to address across traditional asset management, investment, commercial banking, retail banking, active investor brokerage accounts, wealth management, payments, settlements, trading, and even asset servicing and custody, notes FactSet Research. ARKF members firms or companies are powered by innovations and are working to disintermediate or bypass the current financial markets and challenge traditional institutions by offering new solutions that are better, cheaper, faster, more novel, and secure. Futuristic fintech. For the last many years, fintech has been driving after these new foundational transformations in the industry, storming the castle with new technology and new approaches. Those who are delivering great solutions, solving real business challenges, and providing great client service are finding longevity in the market. Others whose execution has not been able to live up to the rhetoric find themselves acquired by incumbents or simply shuttered, according to FactSet. Fintech allows financial firms to leverage cutting-edge technology to reduce cost, improve decision-making and risk controls, remove the middlemen, and enhance customer experiences. A thematic approach includes investments that stand to benefit from structural change driven by demographic and technological changes. And obviously, the fintech is a growth, not a value proposition, but some data points suggest that markets are undervaluing digital wallets and mobile payments, among other fintech concepts, and that could spell opportunity for ARKF investors. The payment processing space is seeing a growing number of big bets placed by venture capitalists, which could give financial technology ETFs a boost. It's a 1.9 trillion USD industry, and that's the largest tech firms are trying to tap into. However, the fintech revolution has also started a counter-revolution among financial firms of all sizes to take on a startup mindset and think differently about how they build products and infrastructure, taking on development methodologies like Agile, DevOps, Cloud First, and building development teams to drive the business, notes FactSet. Final article in this video is Moven teams up with Saudi firm in cross-border fintech experiment. Two fintech firms that from different sides of the world, one a pioneer challenger bank from the United States, the other a fast-growing payments app in Saudi Arabia, are joining forces to create a banking service for young, tech-savvy Saudis who shy away from cash and spend a lot of time on their smartphones. At one of the partnership is Moven, an early challenger bank founded by Brett King in 2010. Over the last few years, it has ratcheted up the enterprise software side of its business, providing technology to banks around the world, including TD Bank of Canada, Westpac in New Zealand, and BCA of Indonesia. And we've also discussed these guys working with Ripple. On the other end is STC Pay. Its digital wallet app, which launched in 2018, allows users to make purchases, pay bills, and transfer money to contacts in their phones, local bank accounts, or international Western Union agents. It operates under a license from the Electronic Money Institution through the Saudi Arabian Monetary Authority and is part of STC Group, the largest telecom in Saudi Arabia. In its first 10 months after exiting the pilot stage, STC Pay racked up 2 million users, and the entire population of Saudi Arabia is about 35 million people. Both fintechs say their collaboration will help them expand faster than they could have on their own and deliver financial wellness and banking services to customers hungry of such services. Moven has 10 years under its belt developing front-end architect for challenger banks. King said, the modern-day challenger bank is not just about the core system and front end, but it has artificial intelligence, capabilities, and data science layers. For example, Moven's algorithms can predict customer needs, such as an inability to pay a bill in the near term. Moven is building the user experience for day-to-day banking in STC Pay, as well as providing access to a private cloud integrated in a core banking system and payments processor gateway. Between this collaboration with STC Pay and its companies work with financial institutions around the world, King predicts more than 50 million people will use Moven technology by the end of the year. STC Pay hopes to see its apps on every smartphone in the region and provide quick, easy financial services that cater to the individual customer. And one of the pillars of our strategies is to be customer-centric, said Ahmed Alanazi, the CEO of STC Pay. There are 13 local banks and many branches of foreign banks in Saudi Arabia, but none of them are providing customized services, Alanazi said. And if you go to YouTube, you want to see videos that you like, he said. We want a unique service that meets the requirements of this generation. And that could include, for example, specific messaging tied to customers' behavior or financial psychological profile. The new banking features are expected to roll out in Saudi Arabia this summer and will include a bank account, digital onboarding, and virtual and physical cards. They hope to introduce micro-lending at a later date and eventually expand to other countries in the Gulf region and in Asia. The cashless trend STC Pay and Moven are eyeing could accelerate in coming weeks as consumers seek to avoid physical contact amid the CV. I think there will be more contactless and digital engagement, and we will be moving away from physical cash, King said. This is a move to optimize customer support and service in the digital world. Under current circumstances, that is not only a good thing, but seems necessary. Another thing I like about this, other than the discussion of the connections to Ripple throughout the article, is Moven connects back to SBI. SBI, we know, is Yoshitaka Kitao, and he is not only a proponent of Ripple and XRP, but he is a partner. And aside of that, he owns a percentage of Ripple. So his best interest is to continue making these contacts and promoting Ripple and XRP through them. So again, Ripple itself is connected to Moven through its partnership with SBI. Again, guys, this is not financial advice. It is for entertainment purposes only. But you can see throughout today's video, again, Ripple connects through everything. It's only a matter of time. If you're down on the prices, don't be, because the long-term game of Ripple and the pricing of XRP is only intended to go higher. Believe me, with all of its connections around the world and the entire financial institution, there's no way it's going to go through all of these efforts and these connections and run the financial planet and stay at 5 cents or 15 cents or 30 cents. As David Schwartz reminds us, the price of XRP has to be high. All right, guys, much love to all of you, and we'll catch you in the next one.